charges of the world to sustain.
Yeah, absolutely. Well, so that's a bit on electric two-wheelers. Gautam Trivedi is our market master of the day. He's co-founder and managing partner at Nepean Capital. He's joining us right now to take some questions. Gautam, great to have you with us here. Thank you very much. In the US, we seem to be in the throes of another pullback rally. This after, of course, inflation undershot for the first time, I think, in a year. What's your sense? Will the rally continue? If it continues, what are prospects looking like near term for our market? We're practically at new highs.
I think the US currently is, witnessing a bunch of bear market rallies. In fact, the rallies are so violent, if I can use that word, is that you almost think that some of the US markets, especially the NASDAQ, is behaving like an emerging market. So in some sense, I think that is clearly what's going on. But I believe that this may be short-lived. Of course, some of the biggest market gurus in the US have been calling for a recession and have been calling for a major correction in the equity markets. We haven't seen significant evidence of that coming through in terms of the recession, at least, though the absolute correction for the NASDAQ and the S&P is in double digit. Now, having said that, with respect to India, we're the second best performing market in Asia after Indonesia, which is fantastic. So we're year to date down only about 5%. We've significantly outperformed the MSCI emerging markets, which is down 26%. We've outperformed China, which is down as much as 32% this year. And also the S&P, which is down 16%. So I think we've had a very good year so far. And there's more positivity coming through. Having said that, I think the one factor that you must keep in mind is that the Indian equity markets have been supported for the past about 18 months or so by domestic demand and domestic retail and institutional investors, not so much by foreigners. So while investors in India, I think, will continue to put money to work, but I think incrementally that share of their wallet will start going into fixed income as yields become more attractive.
Gautam, hi, good morning. We were having this conversation with Ramesh Damani yesterday where he said that India is now becoming not just a manufacturing hub of the world, but one of the largest manufacturing hubs of the world. And we are sort of standing at the threshold of, a big move in that sense on the manufacturing front. As a retail investor, how does one play it? What are the sectors that could be, or the stocks, companies that could be big beneficiaries of this?
Yeah, I think the manufacturing bit is certainly happening. And I think we must caution the fact that we are one of the many that MNC companies are looking at, which is great. I think this should have been done 20 years ago in India, and I'm surprised that it took as long as it did. And frankly, the Modi government is, I think, definitely responsible and takes all of the credit for pushing India into that direction. Now, if you look at Nestle, for example, which had apparently its best quarter in 5 years, it was heartening to see a company like Nestle, a multinational company like Nestle, bring in their global board into India for their board meeting. And every time that happens, and I've seen this in the past, when global companies end up physically having a board meeting in that country, it ends up then being followed by a spate of investments that come through. And I think until the global board doesn't physically visit India, not just Nestle, I mean even other manufacturing companies and other companies in general, they will not get a sense of how vast and how big the appetite in this market is, how big the opportunity really is. So I think I hope we see more of that happening going forward.
Hi, Gautam. Morning. I recall the last time we chatted, you're obviously cautioning us, like most on the street, about the elevated valuations that the Indian markets are trading at. You didn't rule out the possibility of revisiting the June lows as well. Do you believe that still that could be a possibility? We go back to around that 15,000, 15,500 odd levels?
Yeah, that's a good question. The way I see this is as follows. That, as I said, the only thing that's been holding up the market in India, in spite of the relentless selling that we've seen this year by foreigners, which is about roughly 20 billion odd of year-to-date selling, has been the domestic investors. Now, the domestic investors, I think it's not so much out of the love for the country or basically being nationalistic, but a lot of the fact was their investments are driven by the fact that there were no significant investment opportunities for their incremental savings. Now, if you look at what's happening with respect to interest rates in India, I mean, I don't have to tell you, but if you look at fixed income and fixed deposit rates, for example, a Shriram fixed deposit rate, 5-year cumulative, is giving you a 8.9% yield. Tata Capital's FDs are giving you 8% yields. So you're starting to see that momentum coming in. And I think, frankly, at some point, the investor base, which has obviously been relentlessly putting money into SIPs, we've hit a new record of over 13,000 crores last month. I think you will see some of that incremental money going into fixed income and other products. That's one. Second is with respect to China's reopening. You've seen a big rally in China on Friday as well as yesterday. I'm not sure if it's going to sustain, but the fact is that the Chinese government, especially after Xi Jinping got elected for his third term, I think has gone into overdrive and will go into overdrive in reviving their economy. Now, as much as foreign institutional investors, and I've met a lot of them who complain about the fact that over the last 30 years, India has done so well, given over a 2,000% return, MSCI India versus MSCI China, which has been flat. You've really made no money in the last 30 years, point to point, that is. But a lot of these people who are complaining, the day China reopens, you'll see a lot of money flowing back into China. I see that happening. I've seen that in every cycle. And some of that money could exit India as well, because given how expensive we are at 21.7 times calendar 23 versus China, which is at 9.5 times. So the valuation differential between India and China now is way too big to not make a case for investing into China. So I see these two issues potentially dampening the market, and of course, not to mention a potential U.S. recession and a major correction there if it were to happen.
Okay, well, the stock of the moment right now is Apollo Tyres, undoubtedly 6% higher on that stock. Gautam, I wanted your thoughts here, because this entire auto space has been doing really well. A big pickup, whether it's electric vehicles, it's tire makers, global plays. Within this basket, do you still see both valuation and growth headroom in any of these names?
I do see the fact that the auto sector, I think that big jump that we saw, now we're at a run rate of 4 million, which I think has happened. Now, from here to go to 5 million in the next 12 months, I think is going to be a very difficult situation. I don't think that's going to happen. What will happen, though, is the current steady state will continue. I think the other factor to note, which is in today's economic times as well, is with respect to the wedding season. And usually that gives a massive push to demand for cars, for homes, for jewelry, of course, garments, shirtings and suitings. We've spoken to a whole bunch of garment manufacturers, companies like Raymond, for example, who are doing extremely well given the wedding season. So the Confederation of, and let me read this right, the Confederation of All India Traders has put out a survey. Apparently, they said there are 3.2 million weddings happening between the 4th of November and the 14th of December. And the total spend will be 3.75 lakh crores. I mean, that's massive. I know weddings are an annual event, so it's not that I'm saying something new, but what is new is that you haven't seen that kind of spend for the past 2 years because of COVID, and this itself, I think, will help the auto industry in particular.
Oh, you're saying 3.2 million weddings in India between November and December in less than 2 months?
That's right. That's exactly the quantum of weddings that are actually going to happen. That's what the survey said.
That's a lot of weddings.
32 lakh, Sonia. That's not. We used to, growing up, we used to hear this. I mean, actually, even now,